So Robinhood just released the ability to trade index options. And the first question you may have is, what is an index option? And the second question, or the third question, would be, why does this matter and should I even care? I think you probably should, and if those are interesting to you, stick around because we're going to get right into it right now. The first things first is, what even is an index option? So if you are familiar with the S&P 500, which I think a lot of us are, or the NASDAQ 100 index, then you probably know that there are ETFs that model the S&P 500, the NASDAQ, etc. There's total stock market ETFs. There's even individual stocks. And you may already be familiar with options on those things. So you can buy a SPY call, a SPY put, trade options on the S&P 500 ETF, or you can trade options on Apple, Amazon, whatever stock you really want. Most stocks out there have options available, at least the big names. But an index option, we're not dealing with underlying shares. So with SPY, you're looking at options to purchase the right to buy or sell 100 shares of SPY at a specified price at some point in the future through the option contracts. Whereas an index option, there's no underlying shares. Like, it's just the index that we're looking at, and then we're playing a game essentially by buying calls and puts or other option strategies to try to make money off of the price fluctuation or movement or not in the overall index by, again, a certain date in the future. So it's option contracts based off the indexes and not underlying stocks, ETFs, or shares. And if that's still confusing, once I describe how this all works and some of the perks, I think it will make a little more sense. So right now, Robinhood has a couple of different index option offerings. The S&P 500, the VIX, the mini S&P 500, SXP, and the Russell 2000, as well as the NASDAQ 100. So we have, 5 different index options available to us to trade, or 5 different indexes that we can trade options off of. Now, the reason why the mini S&P is there is because that's going to be kind of more of like a cheaper way to go about it, whereas the S&P 500 index options are going to be pretty expensive, relatively speaking, for comparing to something like SPY, where you can buy some cheap contracts. Because the S&P 500 is a very high-priced index, it's going to be more expensive to buy the options there. Now, in terms of some of the differences between index options and, let's say, an ETF options or stock options that we are normally accustomed to playing on Robinhood or other platforms out there, they are cash settled, and this is a European style. So there is no exercising of the option contract prior to the expiration date. So it's like in the past, you may have had, let's say, an Apple option or a SPY call or something along those lines. And if price went substantially in your favor and we went substantially in the money, it's possible that that was going to exercise prior to the expiration date, or you could have had the option to exercise that option before the expiration date if you choose to do so. In this situation, you can't do that. There is no early exercise, and then when the option expires or we reach the expiration date, there is either going to be a value or there is not going to be a value. So for example, if you are in the money, then there will be a value to your option contract, but you do not have to sell the option contract. You could let it expire, and when it expires, you will just keep the profit. Like, they will settle that night, and the next day, you will just have the profit in your account if you have made profits, or you would take the loss from what you bought versus what the option expired at. So let's say that you paid $5,000 in terms of what you paid out of pocket to buy an option on the S&P 500 index. So SPX, you bought an SPX call and you spent $5,000 on it. The value of that option now is worth $6,000. The market closes, you didn't sell it, you were out at lunch, whatever. In your account the next day, you will now have $6,000 cash. That's what cash settlement means. There's no exercising. There's no, I have X number of shares of the S&P 500 index. It's not even possible anyway. That's none of that. It's just cash settlement. So you're good to go. So you can hold these things through the expiration and not have to worry if your strategy makes sense to do so. Another really big piece to the puzzle here is the VIX. I'm sure a lot of you in the past have been looking at trading the VIX, whether that you wanted to buy the VIX get exposure to the VIX when the VIX is low, the volatility index, or short the VIX when it's high. And it was tough to do so because there's a lot of leverage ETFs, but then they have their issues in terms of decay, and there's a lot of concerns with that. Now you have a better way just to play the VIX. So the VIX spikes, The VIX drops, it spikes, it drops, it does its thing. You could play the VIX in a much more, I say, streamlined or simple approach. Obviously, there's still decay factors in these options. It's not like there's no decay. There is decay, but it's a different way to play the VIX that I think offers some pretty good positives to those of us who use that for a hedge or to play the potential up and down action, the VIX, and the volatility that we see on the VIX index as a whole. A few more minor things I want to touch on, which may not be that minor to you. There are fees associated, and if you're looking at Robinhood specifically, which is, I guess, where this is newly traded on, if you have Robinhood Gold, there are less fees if you have the gold versus if you don't have gold. So if you're paying Robinhood $5 a month for gold, you get some perks. One of those perks is, I believe, less or smaller fees on index options. Not I believe, I know that's a perk. And then on top of that, there are a couple different trading times. So you'll see on index options that some will expire in the morning. They'll have an AM expiration, and some will expire in the afternoon, a PM expiration. For AM expirations, the trading stops at 4:15 p.m. the day prior. So if you have an AM expiration for, let's say, Friday morning on the S&P 500 index, so SPX, then you have trading abilities until 4:15 p.m. the day prior on Thursday afternoon. And if you have a PM expiration, that expiration is at 4 p.m. Eastern time on the day of the expiration. No 4:15, no extra time, 4 p.m. If we have a stock market half day, it would be 1 p.m. Eastern time. There's a couple of those before, I believe, around the Thanksgiving holiday, Christmas time. We have those kind of half days. It's 1 p.m. on those days. And then last but not least, a very big perk and a reason why you may want to switch from trading SPY to SPX options is the 60-40 tax benefits, where 60% of your profits would be treated as long-term capital gains when filing your taxes, and 40% of your profits on index options will be treated as short-term capital gains. Whereas most of our trading, active trading on the S&P 500 ETF, SPY options, for example, or other options for stocks, we have to pay short-term capital gains. So if we're trading those things short-term, less than a year, we have to pay short-term capital gains, which generally speaking is going to be a higher tax bracket, especially if you're making more money through your income and stuff. You're paying a higher tax on those gains, but now you have the ability to tax yourself at 60% long-term capital gains and only 40% short-term. So it could, if you're profitable and substantially profitable and you make a lot of money, this could save you a lot of money come tax time. Any other questions, leave them in the comment section down below. And if you're looking for a video diving deeper into the new Robinhood Legend platform and how to trade on it, I will leave that video linked up on the screen right now. I'll see you guys in the next one. Peace.